Welcome back to the Left Library. Today we're looking at a book that explains something people still argue about constantly, why modern capitalism doesn't feel like a free market anymore. If you open an economics textbook, capitalism is usually described as many businesses competing, prices constantly changing, and success depending on efficiency. But when we actually look at the world, we see giant corporations, banks rescuing economies, and governments protecting industries, and countries competing over resources around the world. Rudolf Hilferding noticed this change more than a century ago. His book, Finance Capital, asks a simple question. Why did capitalism stop looking competitive and start looking organized? Marx explained capitalism inside the workplace, how profit comes from workers producing more value than they are paid. But Marx mostly describes early capitalism, when many independent owners competed in markets. Hilferding is writing later, around 60 years later, when capitalism has matured, and he argues it develops into a new stage, one dominated not by individual business owners, but by financial control. He defines this transformation directly, open quote, "Finance capital is capital controlled by banks and employed by industrialists," end quote. In simpler terms, the people who own the money increasingly control the people who run production. To understand why this happens, he begins with something that seems harmless: loans. So let's start simple. Imagine a small business owner. At first, they use their own money. If they fail, they personally fail. The market decides. But modern businesses and corporations don't work like that. They borrow money. Factories, machines, wages are all funded by credit. Hilferding notices this changes power. He writes, open quote, "The dependence of industry upon bank capital increases with the development of the credit system," end quote. In everyday terms, companies cannot operate without banks anymore. And this means survival changes. A company can be efficient and still collapse if its loan is withdrawn. Meanwhile, an inefficient company can survive if it keeps financial backing. So, competition between businesses becomes less decisive than decisions made by money lenders. Banks therefore gain a new role in this economy, not just helping businesses, but deciding which businesses exist. Hilferding explains, open quote, "The bank becomes an institution which controls the allocation of capital," end quote. That sentence is crucial. It means banks begin directing the economy. They don't just react to success, they shape it. And because banks want reliable repayment, they dislike instability. So they discourage risky competition and encourage cooperation between firms. Instead of letting companies destroy each other, they push them to merge. So capitalism quietly shifts from rivalry to coordination. We're taught that capitalism means competition, but Hilferding shows competition actually destroys itself over time. Here's the logic. Firms compete, some lose, the winner grows bigger. The bigger they become, the more dangerous competition becomes, because a price war could threaten huge investments. So large firms stop competing and start coordinating. Hilferding writes, open quote, "Competition is replaced by a conscious regulation of production," end quote. In plain language, businesses begin planning together instead of fighting. They form what he calls cartels, agreements to fix prices. They form trusts, which are giant merged corporations controlling entire industries. Prices stop constantly falling because they are deliberately stabilized. And this isn't corruption or cheating. It's the normal outcome of success. Open quote, "The concentration of capital leads necessarily to the formation of cartels and trusts." End quote. Capitalism produces monopoly not by failure, but by victory. The winners become so powerful they no longer tolerate any uncertainty. This creates a new kind of economy, still capitalist, still profit-driven, but no longer chaotic competition. It becomes organised capitalism. And once industries are organised at home, expansion must move elsewhere. At this point, something new appears. Originally, there were separate roles. Industrial capitalists ran factories, and bankers lent money. But now they fuse. Banks hold shares in companies. Companies depend on banks for investment. Decisions are coordinated across sectors. Ownership spreads across shareholders, while control concentrates in financial leadership. Hilferding describes it, open quote, "The previously separate spheres of industrial, commercial, and bank capital are brought under the common direction of high finance," end quote. We can translate that simply. The economy becomes centrally steered, but privately. Here's the strange part. Capitalism starts behaving like planning. Corporations calculate output in advance, stabilize supply chains, and predict demand. Entire industries function like a single organized system. But the goal is still profit, not social need. So, capitalism becomes organized without becoming democratic. This creates pressure. Once everything profitable at home is already invested, money needs somewhere new to go. Earlier capitalism exported goods to sell products abroad. Modern capitalism exports investment to build production abroad. Hilferding writes, open quote, "The export of capital becomes a necessity as soon as the development of capitalism has reached a certain stage," end quote. Why? Because large organized firms need stable profits. Other countries offer cheaper labor, raw materials, and less competition. So, capital builds railways, mines, and infrastructure outside of its home country. These regions become profit zones. Now, governments get involved. If investment exists abroad, the state must protect them. Diplomacy pressures weaker nations. Trade rules enforce access, and armies guarantee repayment. Hilferding summarizes the relationship, open quote, "Finance capital needs the state, and the state needs finance capital," end quote. Politics and economics merge. Imperial expansion, therefore, isn't just nationalism or greed. It's how organized capital secures safe environments for profit. Countries compete not only for trade, but for control over investment territory. The more stable capitalism becomes internally, the more aggressively it expands externally. Here, Hilferding reaches his deepest insight. Large corporations coordinate production across entire populations. Millions of workers depend on unified systems. Decisions affect entire nations at once. So, production becomes social, meaning it operates collectively, but ownership remains private. He writes, "The socialization of production proceeds rapidly, while appropriation remains private," end quote. This means capitalism builds a planned economic structure but leaves its control in a few hands. Society produces together, but decisions follow profitability rather than need. Because everything is interconnected, crises now hit entire countries instead of isolated firms. For Hilferding, this creates a historical possibility. If the Later Marxists, especially Lenin, use Hilferding's analysis to explain global conflict. When large financial industrial systems require expansion, states compete over territory where investment can be secured. War becomes an economic struggle between organized blocks of capital. Imperialism follows from structure, not personality. Countries behave aggressively not simply because leaders choose to, but because their economic systems require expansion in order to remain profitable. Hilferding shows capitalism evolving step by step. Small competing firms become large corporations. Corporations merge with banks. finance directs industry, investment moves abroad, states then defend global accumulation. Competition produces organisation, organisation produces expansion. The final irony is powerful. Capitalism proves society can coordinate production on a massive global scale, but keeps that coordination serving profit instead of serving human needs. Marx explained how workers create value. Hilferding explained how accumulated capital reshapes the entire world into a single organised system. Once capitalism reaches this stage, it no longer looks like a market of individuals. It looks like a structured global order, one whose organisation raises a simple question. If production is already collective, why is control still private?